All right, now I'm all alone here, but actually there is so much more of you, but I will be the only one on the screen. So while we're waiting, everybody's joining, I just want to keep quick updates on some events that are coming up. There's a SSA show, which is Self-Storage Association in Las Vegas on September 6th to 9th. And I got an opportunity to be co-hosting one of the private invite-only events, which will be on Tuesday, and which is the first day of the conference. So if you are interested in joining, you reach out to me and you can come get some cocktails, get some drinks, little appetizers, and get the conference started the right way. So this is a great conferences in storage, just one of the most fun, but at the same time, one of the most productive, and you get to meet so many great people and learn so much. So if you're in any way interested in self-storage, definitely go to state conferences or national one like this one. Another event is coming up is a self-storage income conference, which will be in Idaho, Coeur d'Alene. And this one will be at the end of September, a bit on 21st to 24th, if I remember exactly the dates. And I get to speak there. I will be one of the speakers. This will be a first storage conference where I get to be on stage. I've been in other events, but never at real storage conference. So besides that, that conference is just incredible. I was there last year. You get to be like on boats. You get to be like on the lake. It's just, oh, they have fireworks. This is beyond conference. Like if you want to just go have some fun, this is the right conference to go to. So this is a little updates on upcoming events. Let me see how everybody's doing. Boom, boom, boom. I want to wait just a little more time, make sure that everybody's typically a little bit late, but got to put first time green screen. So I have green screen behind me, testing it out. Hopefully nothing will fall off and you will see the real background. Hopefully this won't happen, but if it happens, it's going to be just funny. So I'm going to be talking about why storage. And let me pull up my slides so we can do it all properly. Slideshow. Ding, 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 ding. Need to have some background music probably next time for sure. Slideshow, let me make sure. All right. I hope I'm sharing. I hope we can see it. Oh, the chat unfortunately is disabled without purpose, but we do have a Q&A. If somebody can say that everything is fine, you can see my screen, you can see this beautiful sunset, or maybe it's a sunrise. I think it's a sunset, beautiful sunset of the storage. All is good. Danielle, thank you so much. So why is self-storage a good investment? And before we even dive into why self-storage, I want to tell you why I chose this topic. And it's because I was meeting some old friends, some new friends, new people, and they were all just so like shocked. Why storage? I mean, this is not something typically people do, and typically definitely not investing. So people don't even grasp why, but it has so many reasons why I think it's the best industry to be in. It's the best asset class to invest. I mean, there's so many reasons. I couldn't even put all of them, but I will talk about the top ones. And I hope you get to also excited or learn something new. And that's why let's proceed. So why storage? And let's come back to actually this picture. This is not a typical picture of storage, and not even the one that's behind me on the green screen. Storage are just like metal doors, metal roofs, you know, concrete. It's nothing really, no beautiful kitchens, beautiful balconies with beautiful, like, it's such in a way boring asset class, boring business sounds like. And this picture is probably one of the top pictures of self-storage you probably can see. But there is reasons why it's amazing and why I'm so passionate about it and why so many other people also excited about this. And why? So first of all, it's because it gives you access to freedom. And you will think probably right away, financial freedom, but there's so much beyond on the freedom that we have. First of all is time freedom. I think time freedom is so much more important because we only have 24/7, and even billionaires have 24/7. So whether you're investing passively or actively, it's time is so crucial. When you're passive investor, you actually don't put any time into investments. But if you're active, if you put proper systems in place, you have great team, you can actually have a lot of time freedom. Besides that, it's location freedom. If you're a passive investor, you can be anywhere in the world and you can get the direct deposit and wire transfers to your bank and be anywhere in the world. And how about active investors? With all the remote management and tools, if you're not even just a big owner and you're just starting out, you can have an opportunity implementing those technology, those tools, having the right team again in place, and be able to manage the properties from anywhere in the world. That's why I have been investing not in my backyard. In Miami has not been easy to find deals, not even South Florida, even the Florida host itself. That's why I went outside and started investing in other states. And let's talk about, of course, financial freedom. We all want the financial freedom. And you can be working a job and invest passively, but you can also start accumulating more and more passive investments. And at some point, you don't need to get to work at all. And why self-storage? Because it can really get you to the financial freedom, because self-storage is a cash cow. You probably heard it, and they call it for a reason. And let me tell you throughout the whole presentation, keep constantly proving that point. So let's move forward. We know that self-storage can potentially give us freedom, but how? So another reason is because it has lower management and maintenance cost. And I'll be comparing a little bit of other different asset classes, storage to multifamily a lot, not because to diminish multifamily in any way, but just to really understand how self-storage, how powerful self-storage is. And self-storage, so it has on average statistically 1.5 employees, where statistically multifamily has 5.5 employees. I mean, the overhead is so different. And not only you don't have employees, you may even have no employees at all. How come? So you can have boots on the ground, which we call sometimes facility caretaker. They don't work full time. We don't need someone to be sitting in an office all day long, picking on their nose. Putting the right system in place, you can just have someone coming in, checking in constantly on the property. On top of that, you can have a virtual team. And many storage owners use call centers, which are obviously, they're remotely located. How about virtual manager? I was able to hire and train, amazing, she's actually on the line right now, was able to train Cyril to be our virtual manager. Besides having virtual manager, I have virtual team who's helping me with the deal flow, helping me acquiring properties and different tasks. You don't need to have sometimes a full-time employee, and using great people from potentially other countries, like I have from Philippines. They're so knowledgeable. They're so great, hardworking people with good tech skills and good English. Why not to give opportunity to someone else? So, and on top of that, it's great, but let's be honest, humans tend to make some errors. And how we can mitigate it is by implementing technology. And storage has kiosks where you can just come, put the information that you want, choose the unit and book it. Sometimes they can even have, like you see in the right picture, a virtual manager sitting somewhere on kind of central location, and they can be, the real person can appear and talk to you and help you book. But let's be honest, do we even need kiosks if we have kiosks in our pockets, which is cell phones, smartphones, actually. And when you're going to rent a unit, I personally don't want to even call anyone. I would just go on my phone, go to Google Maps, type storage near me, and then look at it, choose the one that has one of the best reviews, go on it, click this, book, pump. Just a few steps, and voila, you get your code. And with that code, you can enter into the facility. And sometimes you can have it even more upscale, which has been implemented a lot in the industry, which is Bluetooth Bluetooth locks. So with your phone, you can enter to your unit. And all is great, because not only it makes your life easier and more safe and less risk, it also gives you an opportunity to reduce overhead, potential errors, decrease expenses, increase cash flow, increase value, and what it all means, increase your returns. So whether you're active investor or passive, this is just all really good stuff. So hope I've been proving a bit my point why self-storage is incredible, but let's keep moving forward. Let me make sure everything is good in the chat. Okay, everything looks fine here. Okay, so now next one, tenant landlord laws. So this is a nightmare for many landlords, those people who own residential properties. Storage doesn't have that. We have no evictions, no commissions to broker, and no turnover cost. And how does it all happen? Okay, you've probably seen Storage Wars. This is a super reality show. Not so real. I mean, we don't even do in-person anymore auctions. It's all happens online. It's actually so much boring. And let me tell you, we don't even find antique Ferraris in units. But what we do find, we're able to, depending on the state, every state is different, you're able to get those non-paying tenants quickly out. And you may potentially get a winner online, and you may cover the cost, but the real point is just to get them out. And the Storage Wars is a great show, but it's not so real. And on top of that, when, let's say, the tenant is out, so the bidder came, took their stuff, or the tenant just leaves, what happens? The unit right here, you just need to sweep it, make sure the door is working, checking in, everything is fine, and voila, the unit is ready. No evictions, no commission to broker, no turnover cost. Next one is the sticky factor. I recently posted, I made a post on LinkedIn about it. So what does it mean? It's the perceived versus actual stay. Many tenants come in and they think, oh, I'm gonna stay there for like 2 months. They end up staying a whole year. Sometimes they come in and think, oh, we're gonna just stay there a few months, and they end up staying several years. And we had one tenant that we got a property in Texas that's been there since 1992. That's 30 years. That's 30 years. There has been definitely sticky. Get stuck at that unit. So the sticky factor definitely works. And if you look at the stats, it's surprisingly that, look at it, 15% of people stay there for 3 to 5 years. How much value they have? Do they really have value of several $1,000s in the unit? Many times not. And only just 17% stay less than 3 months. And this is actually not surprising because, yeah, Americans, we just in general, people with all the Amazon, Walmart, we just tend to keep buying stuff and keeping it in our house. And then if we don't have space, we're going to move it to storage. So the next point is flexible lease terms. So we have month-to-month leases. It's not like when you get a rental, you get it for the whole year. The whole year then means you stuck with the same terms and you stuck with the same rent. When we buy also facilities, we can come and right away increase, change the terms. We don't need to wait until those contracts, those leases expire. We're just coming in and put the rules, put the price that we know we want. So that creates definitely flexibility a lot to us. The next reason why self-storage is static versus dynamic pricing strategy. You've probably, not probably for sure, when you buy flight tickets or even hotels, one day you go to the site and check the pricing. The next day you go, the price can change because they have smart dynamic pricing strategy, meaning whenever there's higher demand for some unit, the price will go up. The less demand, the price will go down. And you can be so much creative, not flexible, and changing those unit sizes depending on where there's more demand. So it's basically single price point versus multiple price point. And that way you can create so much more revenue for your facilities. And that way, talking about all of that combined, we are able to increase rent rates right away. Whenever we feel like the market demands to increase, we can easily increase them. Then we have the tenants tend to stay longer. And even if you increase the rates, if you increase $10, who would want to go and move their things, get the U-Haul and move their stuff? It's typically not happens very often. So all those factors will increase again your income, increase your cash flow, increase the whole value of the property, which together means increasing the returns of both passive and active investors. So next point, income per square foot. Statistically, again, sorry, I'm going to be comparing multifamily with storage. Multifamily is has an income about per $1.02 per square foot per month, whereas storage has $1.12. So let's say take a 100,000 square feet. Let's say both multifamily in the same market, like not in a similar market, multifamily and storage. 100,000 square feet of multifamily will make you $102,000, whereas storage, $112,000. Okay, so that's difference of $10,000. Now let's move forward. We have expense ratio, and if you remember from previous slides, we know that the maintenance cost, the management cost, the employee cost, the overhead is lower. So that way, obviously, the expense ratio also is different. So if by calculating, having already high income per square foot and the lower expense ratio, there is a big difference that can be already storage making income. That's why storage is a cash cow. Let's move forward. Now you would wonder, there's probably not a lot of storage out there, but again, comparing to other asset classes, we'll take by rentals, there's 15 million single family rentals, 1.4 million mobile home rentals, 16 million apartment rentals, and 25 million and plus self-storage units. So there's more storage units, not storages, storage units than all of these other units or rentals. And on top of that, when you pass by and you see there's so many McDonald's, there's so many Wendy's, there's so many Pizza Huts, and plus Dunkin' Donuts, in reality, there is more self-storage facilities than all those fast food restaurants combined, surprisingly. And plus, on top of that, storages are typically taking so much more space than just McDonald's, just little McDonald's. So now let's look at the historical data. And let me look at the time. Okay, great. Historically, self-storage had higher returns. This is just throughout 30 years has been having high returns than any other asset classes. So this is great news. And how about the talking about when it's bad times? So storage considered to be recession resilient or resistant. During 2008, 9, 10, storage had the least loss in the industry. While during COVID, and that's why it's considered virus resistant, it was actually not only didn't lose the list, they actually grow, the industry grew 10%, as well as industrial asset class, the warehousing. So during bad times, storage is doing well. And obviously during great times is doing also fantastic. So that's why storage is considered to be recession resistant. Not recession proof. There's sometimes you can hear there's nothing proof, but definitely resistant. And let's keep going about a little bit about historical data. The storage has the lowest default rate compared to other asset classes. Let's say if you look on the bottom underneath the self-storage healthcare, it's definitely had the highest default rate. Where, and this is data from January 2018, where you're looking at, for example, in multifamily, it also did pretty good, 1.83. However, if you are still comparing to the self-storage, 0.04, this is self-storage did 45 times better than multifamily. And when you look at all this data together, it means that storage have safer loans, so it's best leverage, and banks love it. And when you have lower risk and high returns, investors loving it. Now, talking about fragmented market, there is still so many opportunities storage offers. And let's compare again to multifamily, for example. Only in multifamily 50 plus, okay, 50 plus units I'm talking about here, stats. 7% of them just only owned by individual operators, which is like mom and pop owners. Compared to storage, we got over 50% that are owned by mom and pop. So there's incredible still, even though there's a little over 50,000 or 50, 60,000 of storages, still most of them are owned by mom and pop, where we can come in and do these upgrades. And let me talk about that. So we always talk about value add. Why we always talk about value add, especially in storage, because mom and pop gives us so many great opportunities for low cost value add. So let me give you an example. What is this paper? This paper is a rent roll of the property we have under contract right now. So not only they don't have software, they don't even use Excel spreadsheet. They use pen and paper. So this is type of value add we're talking about. It's not coming in to apartment building, rehabbing kitchens, rehabbing bathrooms, floor. I mean, it's costly, it's time consuming, it's just talking about it. But putting this into like implementing software, putting this data into software, it is easier, but it completely changes. It totally adds value. It totally changes the dynamic, and putting all these technological improvements, systems, processes, which let me show you what can be typically done. So of course, technology, putting cameras, automatic gate, what I was showing earlier, curb appeal. Curb appeal can be similar to multifamily, but again, you don't need to make it as pretty. People don't really live there, so they don't expect for you to have super beautiful curb appeal. But again, you can make it appealing. Marketing. The properties that we're acquiring right now, the portfolio, they don't have even website, and not a website. They don't even have a Google business page, so people can't even Google them. So they just A.J. Osborne had statistics that if about 80% of his customer base comes from online. So this owner has been losing so many people, and he's been attracting all other competition has been attracting all these customers. And again, how much is it going to cost to put Google business page? How much is it going to cost to put a website? Definitely not as much as rehabbing kitchens. And on top of that, we can always put some fees. So it's late fees, admin fees, cutting log fees, all these type of fees that can be added to the income. And another one great low-cost value add is implementing tenant protection. And what's great about it, besides giving that it's going to protect tenant's property and of course the asset itself, which will lower business liability, it will also bring you additional passive income. So without doing anything, the tenant protection companies will split with you profits from that, from the tenants that's going to get that tenant protection. So, and one of the examples is storage shield. So this is for you really going to cost nothing. You just talk to a representative, they implement it into your business, and that's it. And you're going to make more money. You're going to be so much more protected, as well as your tenants. And another unique type of value add, which I won't consider this one low cost, is expansion. When you buy property and there's this land, additional land. In multifamily, it's not so typical that you would go and build more multifamilies, right? But in storage, it's again not as complicated to build more simple, especially drive-up units. Just getting the grading done, gravel, concrete slab, and then many building companies just can come and put those buildings together. Without the AC, non-climate control, it's very simple constructions compared to multifamily. So expansions can be such a great value add opportunities. And again, talking about ancillary incomes, we talked about fees, late fees, but there's also some depending on where you are located, depending on your market needs. You can be putting moving trucks, such as U-Haul. You can contract with U-Haul and without like any hassle, start working with them. Again, if you have additional space, doing both an RV storage or parking and other options, ATM machines, depending on your market, you can increase that income and increase the cash flow, increase the value of the property, and increase those returns. So I hope throughout this presentation right now, you were able to get why self-storage is an amazing, amazing asset class. But how about how? How can you get involved? And sometimes you can get stuck in the paralysis by analysis and trying to figure out how to make it all happen. One of the easiest ways is just be lazy. Be lazy, but be strategically lazy and invest passively in storage. You can always invest passively in storage and enjoy whatever you're doing, keep doing your work, keep going to your vacation, and at the same time, you don't have to stress out and trying to figure out how all those storage systems and investments all works. And I first invested passively into storage. I wanted to learn first of all, how storage works as a passive investor. I wanted to start accumulating that passive income, that retirement, that wealth, step by step. And I'm always investing, still doing active, and I'm always investing passively. So whether you want to be doing just active, mixing it up with passive, it's a great strategy. So why invest passively? Your money will make you money. Just where your money sits just on a bank account, it's not making you anything. It's actually losing its value. Getting the effortless monthly, quarterly checks, not even checks, like direct deposits of wires. I mean, isn't it incredible to make money without doing anything? I think we all want this. Reduce taxable income. We know that because of depreciation or because of the cost segregation studies that owners of properties do, we're able also to reduce our taxable income. No wonder somebody like Grant Cardone or Donald Trump, they don't pay taxes. It's not because they're just hiding something. They just are taking advantage of real estate and self-storage in this case. Hedge against inflation. Again, the money sitting in your bank account, not only not making you money, but it also loses its value. And wealth building. I mean, we all know there's no better way to build your wealth than real estate, than commercial real estate, and especially self-storage. I can say that's a definitely great vehicle. And at the end, aren't we all want to have passive just income? And it doesn't mean that we have to quit and just go and all day long be on the beach, but you can have a choice to do what you want. Do you want to work tomorrow or not? Do you want to go do maybe volunteer, go do build something special, get creative. Maybe you're always passionate about I don't know, playing guitar. This is time for you to be able to get that passive income while pursuing something you love and maybe transform this world. And again, we've discussed why invest in storage, specifically, not only in other asset class, but why storage. We know it has high returns. Bank, CDs, stocks, and other real estate is performed historically not as good as storage. And it has also lower risk historically, because obviously the reasons I said earlier. And where can you get that capital, right? Sometimes you just think, oh, I just need to have that money right there. We have obviously savings accounts, but also self-directed IRAs and 401ks, your retirement accounts. You can invest in storage, in syndications or funds that way. 1031 exchanges, or even pool capital with somebody close to you, and you can come together and invest into some bigger projects. Or inheritance. You never know, you can inherit instead of just waste those money. Start building your wealth, start building that passive income. And or lottery winnings. And by the way, thank you, James, for dropping and telling me to share it, because this is true. There was just a winner for $14 billion. And where you are right now, maybe you're sitting right now in the audience and listening to me, I'll tell you, invest in self-storage. So hope that this been explained to you why self-storage can really give you that freedom, get you to that freedom, because this is an amazing vehicle to get to your dream life. And what is freedom? Freedom is realizing you have a choice, and you can choose to start to make your money while you sleep, while you're working at your career that you're so passionate about, while you may be sipping margarita on an island. So it's your decision to choose to invest in self-storage. And thank you, everyone. I hope you enjoyed the presentation. I have this fancy QR code here that you can scan with your phone, or you can also take this link, and let me actually drop it in the chat. I'm going to drop it in a second in the chat. There's a little survey that you can fill out if in any way you're interested in getting involved in storage, you have some questions. That would be so great. Reach out to me. If you feel like you're just the email person, just send me an email to the email above, Masha@YourFreedomInvestments, or just again, pull up your phone and fill out that survey. It's pretty quick, should take you no more than 2 minutes. I will be able to learn about you more. At the same time, I will see your survey. And after that, we can definitely get on a call and see how we can grow together and create that freedom together.